Okay, guys, so let's go ahead and look at the price action that happened on Friday. As you guys can see, this is the daily time frame over here. Just by looking at the daily time frame, you can tell we are in a bullish market structure, correct? I mean, or we keep getting our breaker structures here. So higher lows, higher highs, higher lows, higher highs, higher lows. So this is a high half. It comes back. So we just keep expecting the market to keep going up. So we are in a bullish market structure. Now, something to pay attention to is so let's look at this. So this is Friday's price action. So we want to see what happened on Friday. So this is Thursday's high, and this is Thursday's low over here. Thursday's low. Thursday's low. Okay, Thursday's low right there, and you have this too. Okay, so if we go down to the 4 hours, you can see pretty much everything that's happening. So let's draw this like right here, and Thursday's okay. There we go. So we can see the price action over there. If we go to the 1 hour, as you can see, push, push. Okay. So this spot over here, this is Friday's price action. Let's go to somewhere like 15. Okay. So clearly, by just looking at this, what you can see that happen is so we have this huge breaker structure that happened over here. 15-minute breaker structure that happened over there. And that's all we can see on this whole move is what happened. So if you were before all this happened, what you've been waiting for to see, make sure this you want to see this, you want to make sure that this 15-minute strong, this 15-minute order block holds. But as you can see, market took it and just kept pushing out. It didn't hold it, just took it. So if you go down to the 5 minute, there we go. You get to see all the stuff that happened. So this would be the 5 minute breaker structure. Okay, 5 minute BOS. Okay, 5 minute breaker structure. Let's go down to the 2 minute. Okay. So as you guys can see, what happened is Thursday's high was Thursday's high was quickly taken out. So this is everything that happened Friday, as you can see Friday. But this was Thursday's high. As you can see, the market came back to this order block over here, and just kept pushing up. Now, something I would have said is for you to get the best entry, if you want to use your retracement tool, as you can see, we got a 51 retracement, 38.2 and 0.25. Okay. So I will say the best thing you can always do is you always want to enter off the 20. If you see the market keep pushing down, you're expecting the structure to hold, you always want to enter on the 25% retracement because no, you're getting in at discount pricing. I mean, this is one of the best ways to do it. You don't need all the fancy words and all that. Just something easy to that your mind can comprehend. Okay, so you get another 25% stop at what's it called, the low that you're expecting to hold, 5 ticks, and look, you could target this box over here, the high of this whole move, or you could just depend on how long you want to hold the trade for. As you can see, this held and pushed all the way back up. So this was a really good trade in the morning. As you can see, this was the 5 minute breaker structure we were expecting to hold. Okay. Let's say you didn't catch this trade over here. What else was remaining? Okay. So now we have this whole move up to this high over there. You can see market pull back a little bit because we took out lows. So you could just draw from over here to these highs. Okay. Okay. So now what happens over here is, as you can see, market pushed up. The market came back into, we got a 50% retracement, which isn't bad. We at least always want to see a 50% retracement. Every time we see a huge move in the market, we at least want to get a retracement of 50%. So even though we didn't come back to 30 or 25, this is still a good retracement. So 50% retracement. Now, the best way to enter a trade like this would have been, so we go ahead and use the candle tool like we always use. So we can see this is a bullish candle. So it's an up bar. This is an up bar because they didn't take out a high or the low. Up bar right there. Then this bullish kind of came out and took out this low. So this has become a down bar now. So this is a down bar. This is a down bar because it didn't take out the high or the low. And this is an up bar because it took out the high. And this is a strong up bar because we took out the next high. So I would say the best entry could have happened right here. So this was the first. This is how we know we're entering a bullish market. So your best entry would have been right here. So you can either put your stop loss at this low right there or this overall low. And since you didn't enter on a retracement, you can target the next bearish candle right there. So as you can see, all of these are up bars because this bearish candle right there took out the low. So this makes this a down bar. As you can see, it pushes down, then and continues to push back up. So this would have been, a 1 to 5 risk reward. So if you've 150, you'd have made $762 on that trade, which isn't a bad trade. One of $150, that's not bad risk at all. So this is one over here that happened over there. Okay. So the next one would be, for example, look at this one over here. So we don't get a 51% retracement, so we wouldn't enter that trade because, I mean, there's no point. Why didn't we get a 51% retracement? Then what happens over here? We start to see structure change, okay? So on a 2 minute, we get a break of structure to the upside, okay? Break of structure happens over there, okay? So now, frankly, on this one, I guess you would have lost this trade because if you see something like this, market broke, it closed above, came back down. So you'd have been waiting for what's it called? You would have got in right there on 25%, okay? Especially of a structure because you were expecting this low over here to hold, but it ain't hold. It happens. So you would have lost this trade over here, which is fine. So when you see something like this, because we're supposed to be in a bullish market, right? Then we come out and take out this low over here, right? So what you do is you want to go to the next higher time frame. So 3 minute, we still see that over there. 4 minute, we see that. 5 minute, now we don't see that on the 5 minute anymore. Now what we have is this structure over here. So now you want to go ahead and draw your two, okay? As you can notice, on the 25% retracement, the market came in, played around, and pushed back up. Then all of a sudden, continued to push back down. This is just one of those situations. It didn't work out. So I guess you would taking one win, you would have one loss. But like I said, if you have proper risk, you would have still been profitable for the day. Because I would say this has been a good trade to enter again. I guess over here, stop loss underneath this low because you're expecting this low to hold, being a 5 minute low. I mean, so this is something you'd have paid attention to. This wasn't a bad one as well, but it happened. So that's pretty much what happened. I mean, other than that, we get a break of structure. Market starts to push back down. As you can see, same thing happened over here. We have a break of structure with the wicks. Not strong breaks because we don't like wicks. We prefer the bodies, but it happens. Where am I? Okay. So we have a break of structure to the upside. What happens? We have this order block over here. So, oops, sorry. We have this order block over here. And something good you would have done on this trade is if you use your 5 minute to look, we got a beautiful entry on there. Stop loss right there. And you would target here. Look at that. 1 to 3. So like there's something easy your brain can comprehend. You don't need all the fancy stuff. Something easy. You just want to be able to read if the market is going up, if the market is going down. So that's one of the good things about this. Okay. So as you can see, entry enter right there. Beautiful trade. So I mean, like I said, that's all that happened. So this was the 5 minute though. So if we go down to the 2 minute, for those people who are still looking for more entries over here. So I guess after this low was taken out, this low was taken out as well. You'd come here because, like I said, two things you're waiting for. Okay, so you did good. The good thing about this is you got a retracement. You got a trade over here as well. So this was a beautiful trade. Okay, so we have this. Let me take this off. Let me put that back. Okay, so you had this break of structure that happened over here. Okay, with the candle. So that's the good thing. Now, what else would you have done? You'd go up here and pull your two down to that low. Okay, and you would want to enter. Remember, like I said, every time we draw from a high to a low, we want to enter at the 25 because 25% is completely discount. Okay, so we always want to enter. Once we draw the two, we want to enter at a 25%. So at a 25% entry would have been right there. Stop loss at this high, and we would have targeted this low. Okay, now look, tapped in and pushed all the way back down. So beautiful. That was, I guess this was a 2 minute trade as well. So like I said, there were trades that happened depending on how, how much trades you're looking to take for the day. This was a couple good trades that happened. So nothing bad. Same thing happened over here again as well. If you had taken a short here, you'd have lost. But like I said, that's the good thing about proper risk, because you want to keep following the structures. And you weren't wrong, because I mean you were just following the structure. Who knows? What if this held and just kept pushing out? We never know. The market just pushed up and look at that, change structure to the upside. So that's pretty much everything that happened on the Fridays Friday's market. Nothing crazy today. Friday's market was easy to understand and easy to trade. Thank you guys for watching. If you guys have any questions, please leave a comment down below. I hope you guys enjoyed this video. And if you like it, please subscribe.